Wednesday, March 12th. Let's level up. CPI number came in better than expected. I think as long as that number remains in the twos, the Fed is okay. We're going to get the PPI number, which is more of a leading indicator for inflation, tomorrow morning, and that will be very key. I think if that starts showing inflation ramping, traders might get a little bit nervous. Friday is, of course, consumer sentiment, and then next Wednesday is the big one with the Fed decision. I think Powell already signaled what he's going to be saying, that they're not going to be very sensitive to individual sets of data, and they're going to be acknowledging that there could be some short-term one-off increases because of tariffs, but overall think inflation is as expected. With regard to the VIX, the bulls have not been able to get it back below the 2308 to 2376 level, which I do believe needs to crack in order to see the 1936 to 2042-ish area. I do think that 2042-ish area, which will roughly be the 20 MA by the time price gets there, could be some support. And of course, for us to feel comfortable that the decline is over, we need to be back below 19.36. I'm guessing that they are going to keep volatility a little bit elevated, at least into the Fed decision, and for sure through PPI and consumer sentiment. With regard to the ES and the NQ, we were able to hold just above the 2.618 of the smaller range at 55.31.5, and I haven't been able to get price back up over where we broke down from. For me to feel comfortable, I really need to see price back up over 56.81.75. If the bulls can do that, I think that they may have decline arrested. Generally, though, I'm only comfortable being long when we're above the 200 MA 30-minute and above downtrends. If we're still in the downtrend and we're still below the 200 MA 30-minute, it's a little iffy and rallies still are suspect. Same thing with the Qs. The bulls there need to get back up over 19,765.5, which lines up with the downtrend, the breakdown from 4 sessions ago, and the 200 MA 30-minute. If they can do that, I think we can see 20,003, maybe 20,215. On the downside, we basically are hovering around the 2 times range here at the 19,660 quarter. If that were to crack, the 2.618 of the range is 18,838.5, but the larger time frame 2 times range is just above there at 18,938. So I do think that 18,938 to the 18,838.5 area will likely be some solid support. I feel that the market isn't really in any way convicted as far as rallying. It seems to me like prices come down, there's a little bit of pause here, and I think that the bulls will have to get over the prior 2 session highs in order to have the secure low setup, which we're about to talk about here. For that secure low setup, the bulls will need to get over the 564.03 level. If they can do that, my guess is they'll check back to the 200 MA, wherever that is at the time, currently 572.26, and likely the 113 reference low at 575.35, and then we'd see that area lines up at the 38.2 of the range as defined by the 218 high and the 311 low. My guess is that there could even be room up to the 50% fib at 582.63, but then we'd have to see, and I would be an incremental seller at those fib retracement levels. With regard to the Qs, we've seen a lot of weakness in stocks like Apple and Nvidia lately. We pulled down to the 918 gap fill at 471.44 and the 61.8 of the range, 467.65. Bulls will need to clear the 481.31 area, and if they can do that, I think they'll check back to the 493.12 to 495 level, maybe an overshoot to 500. If we do keep slipping, I think we could see the 78.6 of the range at 448.57 as defined by the 8.5 low all the way up to the all-time high at 219. With regard to Apple, they could have a potential look below and fail scenario, but they will need to get price not only back up over the 219.38, but I'm going to be stiff and say we need to get over the high of day at 221.75. If that can happen, my guess is we'll pump back up to the 200 MA at 227.54 and maybe even make a run at the 234.94. If we do keep slipping, the channel low comes in at around 210.52, and I think that could offer up some support. I'm not ruling out the potential on some type of a cascadey move. Maybe if PPI is bad or we get a bad Fed, we could come back down and retest the 196.38 to 199.62 breakout zone. That was a lot of resistance and likely will be some support now if we do have that move lower, but we are in a downtrend in Apple. With regard to Nvidia, we bounced off the 204s and channel low. We are over the 113.01, so generally bulls will need to hold 113.01 to 114.45. If they can do so, they'll see 121.79 to 123.24 in all likelihood. Anything back below the 104s and 103s, I think, sees 100.95, and on an extreme move, we could retest the 90.69 reference low that we inked back on 8.5. SMH, I had mentioned, was down into some key support, the 211.01 to 213.57 reference support. We're getting a bounce. So far, it's a little bit meek. I think we could bounce up to 233.07, which is the 38.2 of the range. There's a lot of reference levels right there between 232.24 and 234.17, so that area makes sense as some likely resistance if we do continue to pop. Google is rallying, but we are still below the channel. Remember, we had spent some time above it, so it doesn't bother me that there's a little symmetry below it. I would feel that we could bump up to the 173.86, which is the 3.7 gap fill, and maybe even rally up to the 178s and 181s. At that point, I'd probably call it a day. But if we do start slipping below low of day here, 163.53, I start getting a little bit more iffy and maybe start to consider the 147s being back in play. Tesla, nice bounce today. I think that this is very close to some key support. We had talked about maybe overshooting to the anchor VWAP at 200.17 and maybe even an overshoot to the 2.618 of the range at 186.16. It's still possible that happens. On the upside, I do think that 271 area could offer up some resistance, and I do think that you've got to use low of day now at 241.10 as a raised stop, and I would be looking to pump out some at the 257.54, 271 and 272.40 level as levels on the upside. Also the 200 MA, wherever that is at the time, currently 281.99 and rising. Bitcoin showed weakness early. This is, of course, our ultimate risk-on, risk-off arbiter. We filled the 11.1 gap to 77,100. I believe that there is some support between the 74,415 and 77,100, which is now the 200 MA. On the upside, we could get 85,890 and maybe even a rerun up to between 89,500 and 91,455. That being the 38.2 of the range and the 2.3 reference low that we saw before the continued plunge. Gold still acting well above the 20 MA, good raise stop there, 268.66. I've told you before, I think we're going to see the 279.29 at some point. That is the 2 times range. I am keeping an eye out for the end of the Ukraine war and potential escalations in Iran. Shorter term, I do think a government shutdown seems likely. The Democrats seem to want it. They're not endorsing the CR, and I believe with Rand Paul not voting for it, they need 6 or 7 Democrats to vote, because I do believe Fetterman said he is going to vote for it. I think Lisa Murkowski also could be against it. We'll have to see how that plays out. But I do think a government shutdown is likely. I think it affects 0.18% of GDP in the end, so it's really not that big of a deal, but the media likes to run with it, and in the politically charged environment we're in, you'll think it's fire and brimstone coming from the skies. More interestingly, I'll be very curious to see once these Doge numbers start hitting the jobs reports. I expect those numbers to get weak, and that will likely keep the Fed more dovish. I think that there won't be a one-to-one. Some of those people will find jobs, and of course a lot of them took government payouts, so their spending capacity isn't going to completely collapse. I think one of the things the media keeps missing is that these tariffs have been widely telegraphed. And if you're a purchasing manager or supply chain manager, you're obviously pulling forward some of your purchases to get in with the lower rates. So I think that that could actually pull forward demand and pull growth forward too. And I think that a lot of the fears of short-term growth collapses are likely a little bit over-exaggerated. Like and follow for more.